Well, y'all, we are here. Welcome back. My name is Brandon. I'm one of the coaches. Shawn is with me as well. He is one of our other coaches. I will say this like we did last time. Please mute yourself. Please mute yourself on Zoom. It just helps. We will continue to remind you if someone is not on mute. It just helps everyone with focus. There's enough chaos coming at us. Let's try not to have 10 different voices. So if you could mute yourself and then please actively take your phone, turn off notifications, put it on. That is great practice for me. I'm going to do that on my computer while we are here just so that nothing pops up while we are here. So go ahead and try to remove distractions. You have bought this time. We say it all the time. You've bought this time. You've budgeted out of your busy day. So let's go ahead and make something of it. So we are in installment number 2 of our financial tune-up masterclass series this summer. Last week, we talked all about overhead, right? We talked all about overhead. What are the expenses where if all of our jobs stopped, we know that we need to get this money in because we have to keep the lights on, right? That was what we talked about last week. And that is exactly what we're looking at in this financial tune-up, right? I drive a 2010 white Ford F-150 and I love it. It's great. It's a little rough around the edges, a lot like myself. But the reality is with its age, a lot of lights are popping up on the dashboard, right? Left and right. Maybe it's a tire pressure sensor. Maybe it's check engine light, right? I don't know enough about cars, but if I want my car to work long term, I have to keep getting this stuff looked at. I have to get someone who knows what they're doing to look at it. Well, our business, it also has a dashboard and lights pop up all the time. And because of the chaos, so often we have found business owners just do not take the time to go and get them addressed. Maybe you have lights popping up with the culture or your people. You know you have someone in the wrong seat on the bus. Well, how long are you going to leave the light on, right? It's not Motel 6. We don't want to leave the light on for you. So maybe you have people, maybe you have process problems and you know it, but you just don't address it. Maybe you have some sort of purpose problem. We don't know where we're going. We don't know what we want out of our business. And what we're here in this financial tune-up to do is when you have financial lights pop up, we're trying to highlight those and give you solutions to help liberate you from that chaos. So we talked all about overhead. This was the tracker that we used. I will want a show of hands here. How many of you completed this last week and have it? Anybody? Maybe a couple of y'all. Okay. We are going to be using this today a little bit. If you have it, it will be helpful. If not, that's okay. You can go back and look at last week's. If you have this with you, though, that will be helpful. But what we are going to do is we are going to be looking at our finances. We talked about this last week. Shawn introed with a great job. We talk about the back door. This is where the money is flowing out of our business, right? The back doors are usually wide open, right? French doors leading to this infinity pool, and we are just bleeding money left and right. Well, knowing your overhead allows you to really fine tune what is the actual money we need to get out of our business and what do we not? What can we keep in? Today, we're going to look at the front door. Right? When is the money coming in? What do we do to open up the front door? So often it feels like it's the little mail slot on an old fashioned door where we just have to go and reach through and pull money through. It's so hard to get money in. Well, what do we do? How do we know when money's coming in? We're going to look at forecasting today with Shawn. It's going to be awesome. And then next week, in our last installment, we're going to look at, okay, now that we have money in the house, what do we do to manage it? Right? Okay, I got all these great sales. Okay, I have my overhead, but what now? We're going to look at that next week, right? This is what we are doing in the financial tune-up. And we said it last week and we'll do it again. There's going to be an opportunity at the end of this call to do a 15-minute consultation with one of us coaches. Now, the reason we are doing that is because chaos is going to hit. And we know that. So if you're a business owner, you make over $1 million a year in revenue, you have at least 3 employees, be in the mindset, we're going to ask you to do some work at the end of this. You can do that with a coach, right? So just be on the lookout for that. Now, if you have that overhead, go ahead and have it ready because as Shawn goes through this, that will be helpful. But Shawn, go ahead and walk him through some overhead.
All right. So I did get a call. I am our resident car guy in the group, and Brandon called me on a Saturday and asked me why his car wasn't starting. So we do have experience in dashboard lights as well. It was just a battery, no big deal. All good. Well, we are a team of 10, Business on Purpose, and we have 6 professional coaches. And our goal is to liberate you from chaos. So for those of you who entered in the video ask, we've been trying this new tool lately to use video and questions to kind of get some ideas ahead of time on where people are. For those of you who answered, 33% have a forecasting tool they are using. Of the people that are using it, how far out are they tracking? 60% are not tracking in the future, 1 to 3 months, 3 to 6 months, some. And then the third question was, how many weeks in advance, days in advance, months in advance are you tracking or with making decisions based on this information? Some people said every day, some people said once a week, some people said once a month. So thanks for those answers. I think that was helpful for us to know where everybody is with forecasting. So we've got 3 questions. We're going to keep it simple. What is forecasting? Number 2, why do we need to look at what's ahead? And number 3, how do we start? So what is it? Why do we need to look ahead? And how do we start? I want you to imagine, I like to drive. My 15-year-old just started driving. He's actually a pretty good driver, but he doesn't do too many highways. But I want you to imagine you're on a highway and you're driving and there's this beautiful scene. You've got the mountains ahead, you've got the lake on the side, you're driving, your head's forward, you're excited about vacation or going somewhere. Now, I want you to imagine that instead of looking down the road at what's to come, I want you to look 2 feet in front of your front bumper and keep your eyes focused only 2 feet in front of your bumper. How many of you are having a panic attack? How many of you are thinking, I can't see what's coming, but your eyes are focused only on what's in front of you, like almost like Fred Flintstone. Your feet are down below and you're just watching your feet. This is kind of what it's like to run a business without having a forecasting tool, where you're only looking exactly down in what's in front of you and not looking at what's ahead. And so a forecasting tool for us, this is probably more like you guys are used to. We're in Charlotte, lots of traffic, there's billboards, there's all kinds of things, distracted drivers and 18-wheeler tires that are blown out. We have south of the border signs. I don't know if y'all have those, but we used to look for those on the car ride down to the beach. But if you're on a highway, your goal is to keep your eyes focused ahead. You want to use your mirrors from what's behind you, but you always want to be looking at what's coming ahead. So in business and in forecasting, this means keeping our eyes ahead of what's coming in our business. And so if we think about forecasting and we think about cash position, what happens when you come to a highway like this? This is actually a real highway. It's a trans-African highway they're building, and I thought it was cool, so I thought I'd share. But, in business, you get these things that happen that come up. You think that was unexpected. I've never seen a roundabout in a highway. If you're looking ahead, you can know, all right, I need to make a decision about what's to come and which lane to be in based on future information. So let's go to a definition of what is forecasting. Forecasting is in anticipation of future cash positions in order to make present decisions in business operations. Anticipation of cash positions in order to make present decisions in business operations. So I would also say that this would be using past data or using past results, using data, understanding where you will be in the 6, 12, 18 months to come so you can make present decisions. Because in the game of business, we don't always have all the information we need. We have to make decisions that we don't have full clarity on making all the time. So if we have a forecasting tool, it's one bit of data to help us make better decisions. So the second question that leads into that previous question is, why do we need to know what's ahead? Why do we need to know what's ahead and how much money we have? Well, obviously we want to be in the black, but some of these questions that may come up that are not related to cash, but are related to running your business. Like, do I have financial margin to hire the next person I need for this role? Well, if you don't have a forecasting tool, you can't confidently say, yeah, we're ready to bring on this next role. Number 2, can I continue to pay current employees if work gets slower? If work slows down, revenues slow down, can I keep my operations running cleanly, efficiently, as much as possible without missing a beat? Number 3, if work completely dries up, can you keep the lights on? If work dries up completely, you get not a single job, revenue, contract signed, how long can you keep the lights on? Number 4, can you make capital expenses for a growing segment of work? Say you want to buy some tools, you want to buy a truck, you want to expand your services business. Can you make a capital expense? And do you have the margin and capacity to take that on? Some of these questions are operational questions, but they require financial understanding of what's coming. So forecasting is not a guaranteed income, just like a P&L sheet at the end of the year is not guaranteed profit in your bank account, but it is a way to be more consistent and regular, to understand that there's numbers and there's clarity on what is to come. And so many of our contractors have earn draw schedules. And so you may have a pre-construction agreement, some sort of deposit, some sort of pre-construction payment, and then you'll have segmented draws along the way. So the way that forecasting uses those draw schedules, that they're not guaranteed, but they're likely, is to use those as likely scenarios to understand where the cash is going to be and how you're going to pay receivables, payables all at the same time. So it does provide data, and it helps us to make better decisions, just like driving down the highway with your eyes open instead of having your eyes closed, driving down the highway with 2 feet in front of your bumper. So that's why. Now, how do we start? How do we start doing this? We're going to use a simple tool. Spreadsheets save lives, as Scott says. And so we've built this project tracker. Some of our clients will do, since 80% of our clients are contractors, some of our clients will do new construction and renovations in separate categories. We're going to keep it all together. So no matter what industry you're in, this works. This is going to be your revenue sources. And so in column A, what you're going to do is you're going to start with all of your projects, all of your revenue coming in for 2024 that you have either started already or plan to start this year. So that's in column A. In column B, in column C, you're going to write the projected timeline and the contract value of that work right there. And then here's where it gets a little more specialized. In the monthly columns on the right, you're going to begin to amortize or segment out the total value of that contract into each month. So if it's 100,000, it's a 4-month project, you generally put 4 months, 25,000 per month. And the thing that gets specialized in this, and the thing that you can be a little bit more discreet in if you want to get fancy, is some people, like I said, would take a pre-construction deposit or a pre-construction cost. So we put $10,000 in January, that would be a deposit, and then the job continues through those months, and then you maybe have a final payment in June for 15,000. So the idea is make this work for you. Depending on how you structure your draws, depending how you structure your job costing, this is going to work for you. It may be clean 6 months divided by total contract cost, but also we like to have a little bit of flexibility to make that work for you. So that's where we start. Once we have our projects, we have our timeline, we have our contract value, and we have some sort of amortized schedule of how that's going to get delivered to our bank accounts. Next, we're going to go to the bottom of the sheet, and this is where Brandon's overhead tracker is going to be pulled in. And right here, once you have your project revenue, we're going to add all of your overhead costs in those green boxes. And so if your overhead's going to stay consistent, you're going to keep those the same. So if it's 20,000, you're going to keep it all the way through the end of the year. Maybe you're going to make a hire. Maybe you've got a PM coming in or an engineer coming in. Maybe they come in September. So you'd adjust your overhead. And this is where it can be a forecasting tool, adjusting your overhead to match your experience. This is not a cookie cutter tool. Really want you guys to be able to adapt this to your experience and what you guys are doing. So if you've got hiring or you've got real estate that you're working on, new office space maybe that's going to increase your costs, make sure you increase your costs and add appropriately. But that's your overhead costs right there in the green box. Then we've added a cost of goods sold, COGS percentage on the left, right under that. And this is good for, new construction. Many of our contractors are 80-85% cost of goods. If you're in remodeling, you may be 50-60%. If you're in services, you may be 40-60. Depending on your business and line of work, your cost of goods is going to be adaptable. So when you write that cost of goods percentage in, it's going to automatically tally up expenses and profit and margin that you have to run your business each month. So if you've done this all correctly, you should have forecasting margin in there at the bottom. And the way we've structured this, and you can go into settings and change this, but the red, yellow, greens at the bottom, if your number is between 0 and 15,000, it's going to be yellow. If it's more than 15,000, it's going to be green. And if it's less than 0, it's going to be red. So that's why you see those numbers are red, and that's a negative number. What happens if you see red? What happens if you see red? Many of you are going to maybe freak out like I would and say, oh no, in September, we are red. We are going under. Now, I want to celebrate with you when you see red. Do you know why? Because we can celebrate knowing that we have 3 months to deal with the red negative profit that's coming. I would hate for you to get to September and realize, oh no, we're out of cash. We have more payables than we have receivables, and we've got to cover a lot of money. We need a line of credit. We need to find some money quick. But if we're forecasting and we see red, it's an opportunity for us. It's an opportunity for us to engage and figure out what is causing that. What's a root cause analysis of why is my profit red in that month? Is it because I'm waiting on some receivables? Is it because I'm paying out too much ahead of time? Again, this is a forecasting tool. It's helping us see into the future. So our eyes are down the highway. We see the car's on fire. There's pulled off to the side road. Up, we better pull over and not hit this car. And so if you see red, red is not good. We're not happy about seeing negative. We want you to make a lot of money, but we also want you to know with clarity how to make those decisions along the way so that we can prepare ahead of time. So we're going to go ahead and go ahead and send this over to you guys. We're going to drop this in the chat, and Brandon's going to shoot this in, and then we're going to be on the call and have opportunity for you to ask questions and dig in and do the work. So here we go. Go ahead, Brandon.
So thank you, Shawn. I just threw this in the chat, and I'll say it. We said it last week as well. One of our core values, we talked about big wins at the beginning. It's also 85-15. As business coaches, a lot of the times people are like, we just kind of want you to do it. We do not run businesses. We don't own, Scott owns a business, this one. Shawn and I don't own a business, right? It is not our goal to own your business. We want to provide 85% of what you need to be successful. The other 15% of that is going to be on you, whether it's your specific industry, right? If we go back to this sheet, if it's either your specific industry, it's your effort, whatever it might be, your overhead is going to look different. I saw there was a question in the chat by Michelle, or no, sorry, it wasn't Michelle, it was Elizabeth. Rose said, overhead includes owner salary, payroll. Overhead's going to be all the expenses where if you lose all of your jobs, you still have to pay this stuff, right? We talked about that a little bit last week. And then cost of goods is going to be anything that's job specific. That would be your materials. That would be your subcontractors, anything that is job specific. And then total expenses actually calculate for you. So you don't have to adjust total expenses. It's just going to add these two right here for you. And then profit is going to be a calculation as well, right? So we say 85-15 to say, if you're like, oh, it just doesn't work for me. No, the 15% is on you. You can get it there, right? You will get it to work. So going forward, this is what we're going to do. We said at the beginning, you've already bought this time. So let's go ahead and use it. Vision without implementation is hallucination. Having the thought of, man, I'll complete this forecasting next week, right? I'll just do it next week. Well, that's a great vision. But if you don't actually implement that, this is no better than a mirage where you see water in the desert, right? It's just hallucination. That's all it is. So we want you to spend the rest of this time, right? This masterclass was scheduled from 11 to 12 Eastern. It was an hour. You've baked that time. I want you to use the rest of this time to actually work on this. But before we kind of go into some specifics, I have a question. How many of y'all were on last week's call and then never actually finished your overhead because chaos hit? I don't need a share of hands. You can share if you want to be transparent. That'd be great, right? But I would guess, just statistically speaking, the overwhelming majority of you that were on last week's call never actually finished your overhead because chaos hit you in the mouth. The second we hit hang up on this, you looked at your phone, you had text, you had emails, you had a phone call. Maybe that open door policy stabbed you in the back because someone came in and you no longer had the time you had already baked to work on this, right? So the second you get off this call, I want you to know that this template is going to be in there. If you did miss last week, that is okay. It is on our YouTube right now. We'll make sure you have access to all of it. This information and last week's overhead, that call is actually recorded and is online at YouTube. Just go to mybusinessonpurpose.com. But here's what I want to say when it comes to the next 35 minutes, math's hard, right? Is rather than trying to fill this out on yourself, use us. Most people don't like being used. Shawn and I are unique. We love being used. So please utilize us. We're asking you to spend 30 minutes working on this on your own. If, like I said earlier, if you are a business owner, right, have us help you. We would love to do that. So we have a forecasting sheet that has been shared in the chat. I want you to make a copy of that and go ahead and start filling it out. I will tell you this, 85-15, your 15%, the hardest part of this is just throwing all the data on there. It's going to take some time, but think about this. Every time you get a job, if you're putting that data in one piece at a time, it is relatively easy to maintain, and the clarity it provides way outweighs the difficulty of the time it is to fill it out. So I want you to spend the next 30 minutes forecasting out your work all the way through 2025 if you can. all the way through 2025. If there is something in your head telling you, this just doesn't work for my business, if you think that, and this might ruffle your feathers, if you think you're that special little snowflake that this doesn't work, I'm telling you, we have done this with we've done it with every industry we've worked with. And there's a ton of different ways we can help you figure this out, right? That is what we are here. Use us, right? So if you are the primary owner of your business, you make over $1 million in revenue and have 3 or more full-time employees, we would love to allow you to use us, right? That is what we are in this headspace all the time. So please make the time. You've already bought it. So let us help you, right? We want you to have a clear knowledge of the cash you need for the runway of your business. Now, before Shawn and I answer a few questions, I want to say this. If this is helpful for you, if last week's overhead was helpful, if this week's forecasting was helpful, next week, next Friday at 11 a.m., same song and dance, bring a business owner friend, because what we're going to go through next week is how to actually manage the cash. If you're like, oh, well, overhead's hard for us. Oh, well, forecasting's hard for us. Managing your money, everyone does. You have no excuse. Everyone has to manage the money in your business. We've actually had one of our owners from California has said, managing your money with BOP is like voodoo because it actually works. It works so well. You don't understand it, but it works. Our system has proven methods, and we don't want you to miss it. And I also don't want your friends to miss it. The friends you play euchre with, any Midwest friends out there, the people you play euchre with on the weekends that own a business, they need to know how to manage their money. Please invite them in. And just like last week, we really do value your feedback. We looked through all of your feedback. And if you have any for how we can actually bring more impact next week, please scan this. Now, I'll tell you, do not take a picture of this with your phone. Just go ahead and hover over it and click the link. For those of you that thinks that maybe it was me attacking your age, it was not. I bet that helped one person. It does every time, right? So hover over this. We would love your feedback of how we can actually provide some value. So we have a few minutes now. Shawn and I will stay on this call, but if you have any questions, please put them in there. But y'all, let's get to forecasting. Let's get to it. So any questions from the group, go ahead and throw them in the chat or come off mute, and we would be happy to answer any questions y'all have in regards to forecasting. I'm going back through and seeing a few questions here. I see Susan said, I did last week's template, but is today's a new one? Yes. So last week caught our overhead. Today's is catching forecasted revenue, which overhead is a part of. Shawn's family is a canasta family.
Anybody had any success pulling it up and setting jobs together on your template? And what are you seeing? Everybody's hard at work.
Yeah, that's right.
Love it.
Hey, Jessica, I saw you pop in here. Good to see you.
I know
Jessica would be a great case study
tool
in Texas. Yeah. So she has used this tool and it has helped them. So JVB in the house. That's awesome. It's awesome. Any other questions as y'all are working on this? I will tell you at the bottom of that template, there's a link that says click here. If questions pop up, click that link, schedule a time with one of our coaches, and we'll be happy to walk 15, 30 minutes, walk you through how we would advise you to forecast anything out. And yeah, so cost of goods, and honestly, this is where you're like, I don't like you people for this reason. It's going to change depending on business and also depending on how you or your bookkeeper file things. Some people actually throw subcontractor work into payroll, right? That you could argue they shouldn't, but that's how they do it. So that's how their numbers are based. So Elizabeth Rose, as you're working on cost of goods, look at how you're actually breaking that down in your profit and loss statement. Maybe use QuickBooks, whatever it is. Usually cost of goods is actually a line item there. That is a great place to start. If you don't know how to calculate that percentage, just pull like last year's or the last 6 months of P&L if you've kept up with it, and it'll have, total revenue, and then it will have a cost of goods line, and that is how you can find a percentage, at least to start off with, to see rough numbers. It's a great question.
I don't actually know. I had we was doing a workshop yesterday and they couldn't make a copy. Brandon, have you ever had that where it's grayed out and you can't make a copy?
I have had that, and it's kind of a case by case basis of how to troubleshoot it. Sometimes it makes you be signed in to some sort of Google account to be able to pull it up. And it's not every time, but if your like internet browser's not pulled up to some sort of Google account, it won't let you. We've made it to where you don't just need a business on purpose account. Any account should be able to pull it up. But if it's grayed, I would say try to make sure that your like internet browser settings are there. Or if you can drop your email, we can just shoot you an email with it. And sometimes that will help. It just like brings up another way of looking at it. So for Latoya. If it's still not working, just throw your email in and Shawn and I will shoot you an email with it. So that's great.
Yeah, I worked with a client yesterday. Well, no, not a client, a friend who's also in town, and we were doing a workshop on some of these things. And he's forecasted out 2 years. He's 3 years into a construction business, and he's forecasted out the next 2 years. He is not profitable currently, but is doing almost 8 or 10 million by the end of next year, 18 million in 2 years, I think. So this was a super helpful tool for him because he's able to see, okay, if I can get through these next 12 months of kind of grinding out, I'm going to be in a good space. But it's taking the time to make sure his overhead's covered and his people are covered and pay himself all along the way. And so this was really helpful for him. So I will encourage you guys to just take that time and do this work.
Awesome.
Yeah. All right.
Heck yeah. That sounds good. Thank you all for joining. Please bring a friend next week. We'll have snacks. You have to bring them yourself, but we'll allow snacks next week, and we'll have coffee too. You can bring it yourself. It'll be a great time. But y'all, thank you for taking the time to invest in your business. Right? We exist to liberate business owners from chaos. That is the goal of why we are here. So next week we'll be talking about how to manage the money once you have it in the house. We've tracked our overhead expenses. We've now forecasted out revenue. What do we do when we actually get money? So that's what we'll be talking about next week. So thank you all for joining, and don't hesitate to click the link at the bottom of that template to get some extra help. So thanks, y'all.
All right, guys. Have a great Friday.